Hi everyone, welcome to the weekly mentorship video. Um, let's have a look at the micro NQ for this week. So on a monthly chart, remember on the month of August, we took out some sell-side liquidity, which we've recaptured as we went into the discount zone of this week for the month of September. Now I'm going very fast for the analysis, but that's mostly what's the belief. So there's this reaction here again, respecting the discount wick, and now we're just it is October 5, so we haven't really done a lot, but let's go into a weekly chart in order to assess what has happened. You have this weekly fair value gap here. It is a bullish one. Now you've seen price go right into it and almost touch the high of it, and then close the week like in this manner. Now, of course, this is a retail pattern, so this does not give me a lot of confidence. The only thing that I can see for sure is that we might come and redistribute a little bit lower before going higher. That's the reason why I wouldn't. I mean, what I mean, I don't trust this candle. It would mean I wouldn't enter at this level. I would wait for price to go lower and then give an entry to go higher. Now we have this weekly array here, very small fair value gap. I'm gonna be adding some lipstick in a couple of seconds, but before getting into all that, let's just look at it together, right? From example, from a daily time frame. And now let's add a little bit of lipstick. So let's just rebuild narrative, right? Because as you can see, price has been on a downtrend since 11 July, of course, as called. We knew in the community that this was going to happen at this day at this very specific time, and when that happened, or a specific session of time, more precisely, when that happened, nothing was very much, you know, didn't give much emotion because it was already strongly possible. Now, as we went lower into August, now we're coming back, retracing inside the zone of mitigation. So we have been in the upper quadrant of this daily fair value gap. We have respected the high here, so the daily fair value gap is respected here, even though the bodies close very, very closely to the fill-in of it, but not yet. There's still some of it that is not covered for the bodies. So in any case, as we respect this high, the fair value gap is still pushing price lower. So then at the moment we went lower, we went into this volume imbalance, which was very noticeable on the daily chart. This caused the low of the days. As you can see, this is why patience in the extremes are important, because if you're trying to say, okay, I'm going to go short and aim for this low, and you're fully positioned, well, you have no idea what it can be the reaction at volume imbalances, especially during the week, and especially how we've gapped up during that day of Friday to Monday. So I've already went into this, but I'm just doing a global review for prices before I come into this week, right? Because we've been into a order flow being bearish since July, right? Now we did show more momentum for the upside. So we took this liquidity here, this trend line liquidity, if you can say, with these three highs here. Now we've come back from DVI, right? We've mitigated this area here, causing consolidation. So you can predict areas of consolidation just by using the arrays opposing on the curve and even beyond the curve. But anyways, I won't get into this. If you have a good eye, you will see it. Now on the right side here, we're coming into September, created a low on a Tuesday, of course, and then went higher. This is intro week, of course, and in this, I'm sorry, it's not Tuesday, it's been done Wednesday. So very manipulative week. I remember that week I was not excited to trade, and for a Wednesday this is very rare, but the Tuesday being made on the low of the week can happen for sure. In this case, it did not happen. It was a Monday low, which left sell-side liquidity open. Now there's many things here that I want to talk about. So you have the two overlapping wicks here on the daily chart that gives the beautiful redelivered rebalance array. We have this reaction here at the daily consequent encroachment, which pushed price lower. Now, as we came into this array and the redelivered rebalance and the weekly fair value gap, which is including the very low of this week to the volume imbalance here that you see also on the weekly. So if you only take this section of price, you are being unprecise, my friend. So if you need to take the volume imbalance here in order to have your weekly fair value gap, right? Now, we've seen the reaction of it. Price very, very much struggling to get into the low part of it. We wicked down, as you can see. Now we're looking at this. This is the 4-hour chart. So we created these lows that created trend line liquidity here. Now, last week I did talk a lot about trend lines and how this week it's going to be it's going to be the array of preference of the market makers. And I'm starting to see what they like to do at which time and in what market sentiment. And the fact that they did this trend line just to trap these guys here. And if you can see here on the upside, we have another trend line going from like this. So just this one is just on the bull side. So what are the objectives of this, right? Catching people that want to short at the bottoms because they trade on momentum, and catching buyers that long at the top because they capture momentum and basically trade with emotions. Now, of course, if you trade the intraday liquidity, intra-range, and you maintain your low hanging fruit, adjusting with your risk to reward per trade, you will be able to succeed in these conditions. Now, something I've noticed here is the sell side liquidity being, as you can see, not very far from what it is, but just the new week opening gap and the delivery rebalance are so precise in how they act. As you can see here, the very, very low of this candle is 19,851 and the very low is 19,850.5. So 2 ticks of difference as far as the low here created on the Thursday reversal profile, which didn't happen too. It was a very choppy week at the beginning of the month, since it is the non-farm payrolls. So this week might be more interesting. As you can see, we've created this kind of like bullish momentum here. A lot of rebalancing. You can see the 4-hour wicks here going to the new week opening gap of September 22nd to September 27th. You can see the precision here. Again, just one tick below the low, so one mohawk right here. The new day opening gaps serving again as zones of sensitivity. And this is why every time I talked about sensitivity, I want you guys to understand that you want to see strong reaction, you want to see speed, if only you're planning to have a recapture or show order flow. So this view of price will allow you to be precise, to know what to expect, and if it doesn't meet your expectations, you just don't trade. If it's doing something you don't like, don't trade. Like it's very simple. It's so simple. Drink a little bit of tea, so give me a quick second. Thank you. So here we crossed the new week opening gap of September 29 to October 4th. And we wicked a little bit about the new day opening gap of September 30. Now, I strongly recommend to have these new week opening gaps, new day opening gaps, because they can be useful up to even 5 weeks and even more than that, honestly. So you have to be, I would say they're very important, especially if you're in a range where price has not been before, or you're in a range where price is, you're kind of editing as far as the order flow. There's a fair value gap, but it's wicking strongly to it. It's not getting away at the right time. There's no sensitivity in this weekly fair value gap, right? Because if it would have been sensitivity here, we would have seen a stronger reaction at the consequent encroachment. But we did see some order flow, sponsorship, because of the bodies very, very much not closing below it. There's just 2 very, very small candles that close below it, and so it's showing that it's definitely unwilling to go to that level. Just manipulated, as we know, The body's still distorting, the wicks do the damage. So that's most of the thing that I see right in this chart. We do have this buy sell liquidity here that looks very interesting. If I was a market maker, and this is only if I was, Monday to Tuesday, I would like price to go higher. If it doesn't do that, I will reassess Wednesday. But I want it to go higher to turtle soup some longs, these longs, these longs, these longs, this high, and continue lower for a little bit. I do see how we can come and take the buy side here. That's gonna, Monday and Tuesday are going to tell me with higher probability what is it gonna do. But I'm just giving you the scenarios, right? So if by Monday and Tuesday we're within this range and we haven't taken any liquidity, like we're still in this range by Tuesday, let's say, okay? Then by Wednesday or by Tuesday, end of the day, or like London or maybe New York session, I would like price to take these highs, the buy side liquidity, and then show me if it's gonna go a lower, right? To create a Tuesday high of the week. Now, if we instead Tuesday takes out Monday's low, and we see that we're still within this range, I will take long and take out these stops here. That's how I adapt. And of course, this is not financial advice in any reason. I'm just teaching what I think about the markets. It's for educational purposes only. So that's my perspective on what I think is gonna happen, and then that's a narrative that I can also, you can even have more interesting reactions of price within the 1 hour time frame, where you can have the midnight price here of Friday giving a perfect algorithmic reaction here, one tick above it, and it just wicked higher and wicked down and wicked higher, long wicks, right? Whenever there's long wicks on the 1 hour, I'm always hesitant, because that means that on the 15, on the 5, it's closing and it's not continuing, it's reversing directly under closes, like as you can see here. This is market behavior, like how you can go from a 1 hour candlestick and imagine yourself seeing them on the 15, right? Everything is fractal, like 4 times, 4 quarters, 4 periods of time, 4 sessions, 4 seasons, 4 weeks in a month. I could continue, like it's all about how you manage your your knowledge of the market, and then consequently your expectations. So as I told you, I could see price continuing higher and dropping lower. I have no, I'm not attached to the outcome. I'm gonna adapt to whatever the market gives me and show me that's more likely. And of course, if I'm not certain about any of my trades, I will take it with only 1 micro. So that's gonna be the smallest position, and I'm gonna reduce my trading frequency extremely low to maybe 1 execution on the day. If really I don't have that confidence, what oftentimes happens is that I don't even trade. So now this week, we have Monday, Tuesday that are no news. So I'd like to see some chopping around that, or something that's gonna indicate, more of what's gonna happen in the week. In either case, I'm gonna win, because in either case, I have scenarios and I have narratives that it can happen, and there's possibilities on my mind of what the market can do and how it can move and how I need to adapt to those. I can play any narrative that's happening. I can try to play it. Now, some of them might not be good. Some of them might not be optimal, and I might just feel like I don't want to trade because it's low probability. So that's where I want you guys to be at, and that's where I think the objective of this video is. And with the private students, we're going to go very much deeply about conscientiousness. We're going to go into how to develop the lifestyle that you want. And this is something I'm going to do exclusively today for them. So if you want to be a part of that, there's the link in the description. Join. You can ask for questions in the server. The server is free. You can ask questions. Don't hesitate. This is the place to grow. I want everybody here to be a testimony of success. I want everybody to get to the best version that they can, to the best trader that they are, and that's my objective with this project. So thank you for being here, and I'll see you on the next one. Peace.